Anticipate, don't improvise. My process is purely logistical, narrowly focused by design. I'm not here to take sides. It's not my place to formulate any opinion. No one who can afford me needs to waste time winning me to some cause. I serve no god or country. I fly no flag. If I'm effective, it's because of one simple fact. I don't give a fuck.
Welcome to Market Makers, everyone. Guys, I hope you had a great weekend. I know our friends and certainly my family up in the Northeast are getting blanketed with snow. So I hope this video brings some warmth to your day because we have a beautiful day here in Florida. It was freezing this morning, but now it's nice and bright and sunny. But guys, what I want to talk to you about today is a very important topic. It's about trend. Right? It's about trend, how to understand trend. You see people saying you're in a downtrend, people saying you're in an uptrend. What is the truth? Because what is the point of TA? The point of TA is to give you an advantage. There's this old adage in markets, if everybody is using the same techniques to try to trade the market, then they're all fighting over the same pile of money. This is the whole idea of understanding multiple methods to skin the cat, whether it's economics, whether it's information, whether it's fundamentals, whether it is technical analysis, something to give you an edge so you can see something that the average person in the markets cannot see. Now, before we begin, I want to ask you guys a question. Who do you think is considered the greatest investor of all time? Just think about it for a second. A lot of people are going to come up with Warren Buffett, right? Warren Buffett, certainly one of the greatest, if not the greatest investor of all time. But when you have symmetry in information and you don't have an asymmetrical advantage of insider information, how does Warren Buffett do? I want you guys to watch this short video clip because this is about the prediction markets, the initial topic, because it came to light during the Super Bowl or just post the Super Bowl. On the big prediction markets, just a handful of accounts make the vast majority of money and everybody else loses. And it has to do with inside information. And so listen to this because this used to be the case in the markets. I think you guys will find this very interesting and I'll share my comments on the other side. Lee, roll it.
Why are these things happening? It's because there's too many of these prediction markets that can be manipulated this way. Somebody knows something that somebody else doesn't know, and there's no way to arbitrate that. This used to exist in the securities market too, and this is where now I'm going to get a lot of people really upset with me. In 2000, we introduced the law called Reg FD. And what was the point of Reg FD? It was basically that if you're a CFO, you cannot talk to an individual stock manager and tell him something that you then don't tell everybody else. Essentially inside information. That used to be not illegal. I won't say that it was legal. I would just say that used to be not illegal. You call your buddy, he says, hey, how you doing? He goes, man, quarter was a blockbuster. You would go and buy the stock. And starting in the 2000s, it became illegal. And there used to be these networks of information arbitrage that took advantage of this. Now, this is an example of Warren Buffett's returns pre and post Reg FD. Now, what do you see? His returns were double the market returns when this kind of information sharing was legal. And the minute that it became illegal and you had to basically act on the same edge as everybody else, his returns went to the market return. He generated zero alpha. In fact, he probably on the margins lost a little bit. So this is the single best investor in the world. This is what happens when you have information symmetry. So it's just meant to explain that markets thrive when there's asymmetry. Billions and billions of dollars will be made in asymmetry. The prediction markets today, unless they are regulated out of existence or shut down, will look like the stock market pre-Reg FD. And there's nothing we can do except choose not to bet it.
So isn't that amazing? Before it was made illegal, to call up, like you're on Wall Street, you're Warren Buffett, you're a trader on Wall Street. You used to be able to, 1980s, 1990s, call up your other buddies, call up some executives, call up a CFO of a company, maybe an oil company you want to invest in. Hey, how's your quarter looking? Are you guys doing well? Are you making money? Oh, it's a blockbuster year? Oh, okay, fantastic. I'll buy the stock. So from 1980 to 2000, Warren Buffett doubled the market returns. And what that means is when you say somebody doubles the returns, that means your grandmother who just bought the S&P in 1980, that's their benchmark, just bought the S&P in 1980, Warren Buffett was able to double whatever she got over that time period for 20 years. Then they passed Reg FD. Warren Buffett can't get inside information anymore, even though he's the greatest investor in the world. We all know a lot of people still cheat, not saying Warren Buffett does, but we know a lot of people do. But he can't get inside information anymore. So how does he perform over the next 20 years? He's flat against the market or down against the market, meaning your grandmother who bought the S&P in 2000 did just as good as Warren Buffett. Warren Buffett has analysts, professional traders, economists, all these people working for him doing research on companies. This is why the edge, I'm telling you this for a reason. The edge in the markets, there's a difference between trading and investing. You can invest just as well as 95% of Wall Street. You don't believe me? I've showed you guys this stat all the time. Lee, throw up this scorecard. If you look at the scorecard of long-term investing on Wall Street, because remember, all this is public, right? All this is public. Over a 15-year horizon, roughly 92 to 97% of large, mid, and small cap managers fail to outperform their benchmarks. Think about that. Out of 100 people, maybe 8 people over 15 years out of 100 on Wall Street actually beat the market. 8 people out of 100. Anybody can invest. You don't have to pay your fees. You don't have to pay these guys and the 25-year-old stockbrokers. Watch Wolf of Wall Street. That's how it very much was like that. I was at Merrill Lynch for 13 years. I'm just telling you, this is what's so exciting about this new age with online trading apps, with all the information available, with AI to crunch numbers for you. AI is your quant, right? Remember Wolf of Wall Street? This is my quant. AI is your quant. You can get all the data they can get, and if they don't get inside information, you will beat them just by being invested. So what is the purpose of trading? There's only one purpose of trading. The purpose of trading is to make money. That's the purpose of trading. If you cannot trade and make money, don't trade. Just invest. Invest and be smart, and you will make money. And you will beat 95% of Wall Street over a 15-year period. It's really that simple. So what advantages do you have of being a trader? You can make large gains quickly, which is why so many people want to learn to trade. So many people blow up accounts. But what is your asymmetrical advantage over some guy coming on TV on CNBC or Bloomberg who's using an RSI and a 200-day moving average? What's your advantage over him? Your advantage over him is if you understand patterns, if you understand cycles, if you confuse that with the geopolitical space, if you confuse that with economics. These are all advantages. Have you ever noticed, like with what we have going on now with the Middle East, the guy, like they'll bring a guy on Bloomberg who covers tech stocks, and they ask him how he thinks the war with Iran, if we have a war with Iran, how that will play out with tech stocks. This is a guy who hasn't studied any military history. He hasn't studied anything. He doesn't know anything about combat. He probably knows very little about geopolitical space, but now because he's on TV, he has the air of authority. Most of these guys don't know what the hell they're talking about. They're used car salesmen, and 95% of them cannot beat the market. This is the whole purpose of learning techniques and trading, learning systems, learning patterns. This is what you want to do to give you an edge, because if everybody's using the same system, if everybody's just using a trend line and a 200-day moving average, guess what? You're all fighting over the same pot of money. You have to find a way to give yourself an advantage, an asymmetrical advantage over the average person to get that extra money. And that's the purpose of this show. Guys, if you like this content, please be sure to like and subscribe to the channel. This content is brought to you by SimpleFX. If you guys do want to trade, I highly recommend SimpleFX. If you live outside the USA and Canada, it's a fantastic exchange to trade everything. Cryptos, Forex, commodities, stocks, indices globally. You can trade it there on Simple, be a market maker's VIP. Link in the video description, and trade all the cryptos on Bitunix, and you can trade them all from anywhere. Link in the video description, be a market maker's VIP. If you like these videos and you want to see my deep dives, I'm doing an ETF video after this on the Spider, on the triple Qs. Check out the YouTube memberships, click the join button. You can get our video updates there, or you can bounce over to our Discord all through YouTube right there with the join button. All right, let's go ahead and kick this thing off. Let's talk about the ES. Let's just talk about what an actual trend is, right? What is a trend? You'd be surprised, and maybe some of you wouldn't be surprised because I know you watch other channels and you see people's comments on channels. People don't really know what a trend is, right? Most people don't know some of the basic concepts in TA because most people don't read anything. They rely on what other people are telling them. So when you look at this, we're going to zoom out here on ES. Everything's timestamped below, guys. We're going to zoom out on ES. What do we have, can we agree upon as a very significant low? Talk about it all the time. The global sell-off low of April 7th. Global, okay? Everything bottom. Bitcoin, global indices, stocks, everything came down. You had the bottom with the tariff sell-off. What's your trend? Here's your trend. Your trend is your low, and then you break above your 50. There's a high, there's a higher low. There's a high, there's a higher low. There's a high, there's a higher low, there's an all-time high, and here's a higher low. This is what's called an intermediate uptrend. Let's define the trend. Let's define a trend. A near-term trend is days or weeks. An intermediate trend is weeks or months, and this is basically on Dow. And a long-term trend can be months or years. This is an intermediate term uptrend. Now, while everybody on YouTube is telling you about a 50% collapse and how everything's falling apart, what is the actual trend staring you in the face? An intermediate uptrend. When is this trend broken? You have to take out the lowest low before your all-time high. That is 65.25. Are there trades in here in between? I told you before, if we take out the 50, come down and test this range. We're down here at 6,500 and change. Come back up. Are there not trades in here? Of course there are. If you want to try to short tops, pick bottoms. You can short at 7,000. If you're bearish, think it's going back down to 6,500 or lower. But this trend has not changed. You are in an intermediate uptrend. Where you are right now, breaking the uptrend line, you're in a linear market. Linear markets resolve one of two ways. Your macro look, your intermediate look is an uptrend. Linear markets will resolve to the upside, which means you will make a higher low and a new high, or they will resolve to the downside. To resolve to the downside, you have to take out your last significant low, which means you would have to come down, chop around, lose 65.25. You are now in a validated downtrend. You took out that low, you're in a downtrend. Everything in between is a linear market. If the S&P keeps selling off and goes down to 65.25, bounces back up, and you look at the chart, this is still an uptrend. Why? Because you have your significant low, you have your various higher highs, higher lows, higher highs, higher low, and a co-equal low, higher high. This will resolve either up or it will resolve down. If it resolves down, you have broken your intermediate term uptrend and you are in a near term downtrend. So overall, when people say, why are you so bullish? I'm bullish because the technicals are telling me we are in an intermediate term uptrend that has not been broken. When it is broken, if it is broken, I will be bearish when we take out the uptrend. That's when I will flip bearish. I'll be looking for shorts. Those of you that have been watching my channel for years know I love shorts, right? I mean, that's how I made most of my money in crypto was shorting the market. But this is an intermediate uptrend. looking for a breakout resolution or a breakdown. It just so happens to break down, you have to come down below 65.25 to take out this strong support. You could speculate, you could short here thinking it's going to collapse. You can do that, but I'm looking for a change of trend, because until we have a change of trend, my bias remains to go to the upside to try to test 7,500. 70 or 7,000 was my base case, bull case for 2025, and we hit it December 26th, and I gave that target to you back in April. Unless the trend breaks, my target remains max bull case 7,500. I want to see if we move up to test my max bull case target. Okay, so that explains a little bit how I think, 'cause I see people asking, they don't understand what I'm looking at. We look at the VIX. What will happen if we come down into this green range, right? What happens if we slip below 67.50, in between there and 65.50, right? What happens? I think that's when you see the VIX spike up to our target, the same target we hit before, which is 25 to 29 right in here. Same target we did in August or October, and same target we did in November. Both of these times, just like in April, everybody told you the market was collapsing 50%. Would be totally normal if we slip into that green support zone. We look at the NASDAQ, again, validated uptrend. We broke the uptrend line. We broke below the 50. When is the NASDAQ in a downtrend? Below 23.9. You have to resolve, take out support, break down below 23.9. You are in a downtrend in the NASDAQ. Right now, you are in a linear market, okay? You're linear. You are sideways. You will resolve to the upside above 26, or you will resolve to the downside below 23.9. But right now, you're linear. You're sideways, even though you have SaaSpocalypse going on underneath the hood. We look at the Russell, again, a very easy one to see, right? Been over the trend many times. April low, you can pick your higher lows, higher highs all through trend. Let's just look at the major one. Higher high, higher low, higher high, higher low, higher high, still have a higher low. If the Russell breaks down, because you can see you have a double top right here. If the Russell breaks down, it will break down below its trend line, the valid uptrend line. It will break below the 50, and the trend will change below 2,500 on the Russell. You will be in more of a downtrend. Even though you have a major significant low right here, this would be a large retracement at that juncture from your all-time high. If you come down there, it's a 10% retracement to come test 2,500. So obviously you can retrace, and that's the key concept to understand. You have retracements and uptrends, guys. You did this all through here. Let's just flip back to the S&P. You did this all through here after your 2022 low, right? Your 2022 low, you get retracements and uptrends. I don't think anybody would look at the low from 2022 on the S&P and say this wasn't an uptrend. Well, these are big retracements. These are 10, 12, 13% retracements. This is about 11% retracement. You did another one right here, all the while keeping your uptrend, okay? You kept your uptrend, 11%, 10%, and then there's your big April bottom, February top, okay? So you get retracements in uptrends, but that's where we are in the market right now. So the Russell, the key support level you want to hold near term here is that neckline right there at 25.66. Let's turn that guy green. 25.66. If you break that, you could be coming down to test 2,500. And of course, you'd be just below the 50, finally breaking your uptrend trend line as well. But at that juncture, longer term, low, high, higher low. If you come down here, bounce around, yes, it's a 9% retracement. You still have your higher low structure with your higher high. Your intermediate term uptrend is still intact, okay? Even though it's a larger retracement. Let's look at the cryptos for those of you that didn't jump to it immediately already. Let's look at Bitcoin. What do we got on Bren Theory? Well, Bren Theory is playing out today because we had crypto open up red yesterday. Futures markets open up red yesterday. Some of that is because, obviously, of what happened with the tariffs. On Friday, the Supreme Court said Trump can't use IEEPA as the authority to impose the tariffs. They did say he could use these other methods to impose the tariffs. They take a little bit longer. Trump tweets out, over the weekend or posts over the weekend on Truth that he's raising the tariff rate to 15%. A lot of these countries had 10% tariff agreements. Markets open up red, crypto sells off. Crypto sold off, and here on Monday, you see the tech sector, particularly the software tech sector, sell off as well. Okay, so there's your Bren theory confirmation. Crypto down, software tech down as well. 0.73 correlation over a 30-day rolling average, okay? Very high correlation. You can see it here in the IGV. There's that key level we talked about, 76. You want to hold it. You've tested it multiple times. Going back to 2024, it's a key level, and you are at 76.94. You want to hold that 76, right? If you slip below it, you could be coming down lower to 71 to that moving average. And if that happens, you could see more selling pressure on crypto. The big macro pattern on Bitcoin. You guys tell I'm excited. I want to go back out in this beautiful day. But the big macro pattern on Bitcoin. Perfect AB equals CD would be 52,382 on Bitcoin. Just because you have a pattern doesn't mean it gets there. No, of course not. What do we have going on in Bitcoin? We're going to look at that, and I'll show you the trend on Bitcoin. But if we were to flush out, that is where I have confluence is 52K, multiple patterns, as you guys know. 18 minutes in, don't want to go over all of them. That's the big one that I'm tracking, 52K. We look at Bitcoin on the daily. Again, we went over an uptrend on the S&P. What is a downtrend? Bitcoin is in an intermediate downtrend, meaning weeks to months since October when it peaked. A downtrend, you have the markets come up. Let's get the brush. The markets come up to a peak. Pretend this is Bitcoin. You then peak out. You sell off, right? Sometimes you get the little rebound, dead cat bounces. Then you level down again. And then, or right now I should say, what's the market doing? It's doing this, okay? So what's a downtrend? All-time high, low, higher low, lower low, lower high. I said higher low, lower high. Let me redo that because I just misspoke and I don't feel like remaking the whole video. All-time high, there's your low, there's your lower high, there's your lower low, there's your lower high again. That's a valid intermediate term downtrend. You've been in it for months. But what is this? What the market's doing right now? This is a linear market. The linear market will resolve to the upside. If it resolves to the upside, its first big test will be to test the previous resistance of where it fell from, okay? That's that 82 to 85K Bitcoin. If it resolves to the downside, that's when you see the flush out. What's that flush out look like? Showed you guys these targets already. If you take out your low of 59K, your flush out's at 52, the AB equals CD, and then 47 beneath that. You know how Bitcoin moves. It has a lot of volatility. Could easily flush out into the high 40s. So this is your trend layout, and I can show you this in the current candle action. You could say Bitcoin's in a downtrend. Well, Bitcoin near term, there's a high, there's a lower high, there's a lower high. That's a series of lower highs. The issue is your low, your significant low of 59,930, and as of right now, you still have a higher low. You're in a linear market that will resolve to the upside or come down, take out the low, and then resolve to the downside, okay? So you're sideways. You can say this is bearish if you want to say it's bearish. You can say it's bullish if you want to say it's bullish. Intermediate term, you're in a downtrend. Overall, macro, that's bearish. However, near term, you're going sideways. And if you look at what you do as a trader, what do? You can look at some very simple techniques. You'll see guys on YouTube, this is like 95% of their TAs drawing a trend line. Draw a trend line across your tops. Look at your 18 RMA here on the 8-hour time frame. Look at how it rejected price here. If you're interested in smaller shorts, rejected price here. Look at the baseline of your first level of support where you're bouncing off of, 65K. There's your significant low at 59,930. So if Bitcoin was to resolve higher, break the trend line, break out, go above 72, I believe you will be coming up to 82 to 85 for your first key test. but you have steps to do. You have to break the trend line. You have to get on top of the moving average if you care about those types of things. And ultimately, you have to break out of your linear range, which is 72K. You have to break out of that range. And if you think everything's falling apart, this is just the first leg down, Bitcoin's going down below 10K, you have no idea what you're talking about, Brendan, that's absolutely fine, but you have to see it in the charts. And seeing it in the charts is breaking below 65, ultimately taking out your low and level changing down, right? You have to take out 59. Then you flipped your linear market to resuming the downtrend. The intermediate downtrend has been resumed once you take out the low. Unless you take out the low, you're linear. If you break above the high, near term, you're in an uptrend, okay? That's where we're at. This is just some of the terminology helps people understand what's happening in the market. I'll show you the indicators, but you guys know everything's bearish. Volume's bearish, RSI's bearish, momentum's about to roll over, selling volume's bearish, ADX shows selling. So everything is bearish. It's where we are. You look at Ethereum, man, these videos, I talk too much. 23 minutes. Look at Ethereum, key support line right here from your near-term sideways trend was 1893. Look at how you're hugging it, 1886, these 3 8-hour candles below it. When does the downtrend resume? Just like on Bitcoin, you have to take out your low, 1750. You're linear. When does an uptrend, a near-term uptrend resume, even though you have an intermediate-term downtrend? A near-term uptrend will resume when you can flip your 18, because you got rejected here, flip the 18, flip the trend line, come up, flip the fractal high of 2149. That is a near-term uptrend, and that, your first key test, is going to be 2700 to 2820. Let's call it 2750. That's your first key test. So again, I mean, I have a Discord. We have a lot of people on Discord. I watch all the conversations. I participate in the conversations. I know some people are very bearish. I know some people have a lot of optimism and hope, at least for a bounce. I'm one of those people that are looking for a bounce if the markets break out. But just understand there's steps from a swing type perspective. You want to scalp ranges, go up and down, you know, whatever, 100 points, 200 points, you can do that. I'm looking for a breakout from a linear range. Flip the trend line, flip 2150, near-term uptrend, or break down. Sweep your low, most likely come back and test it, and then your level changing to the lower levels, and that's 1500 and 1333 on Ethereum if you break down. Right now, this is all linear, this is all chop, and lots of people are getting chopped up. Something like 84% of traders lose money. People are getting chopped up because people don't have patience and they don't want to wait. So let's look at Solana. Solana, same thing, guys. I'm not going to do the whole trend thing. Linear market, right? What do you need to do? Break above the 18 RMA on the 8-hour time frame. Break above it, flip the trend line, flip $91, your fractal high. Solana, I have coming up between 117 and 127. That's the first key resistance range. Let's just call it 121. That's what I was looking at, right in that range for that move for Solana to be in a near-term uptrend, intermediate term, clearly in a downtrend. However, to resume your downtrend, you have to take out 76, which is where you bounced off of. Take out 76, ultimately take out 66. Why? Because that's your low. When you're in a downtrend, you need to make a lower low. So take out 66, and then you have your deeper Solana targets of 51 and 42 if you are to resume the downtrend. Until you do that, you're sideways, you're chopping people up, or you got people accumulating, and you have people trying to short tops in the ranges. A lot of people like to trade these ranges. I like to look for breakouts and breakdowns, try to catch a bigger move. Sometimes I add the stacks here as well, but that's what I'm looking at there in Solana. Coin I'm interested in because for some reason seems to be a lot of activity on it. Hyperliquid. Don't know anything about the fundamentals of it. Don't really care. But Hyperliquid, $24 is a target I would like to see hit. I don't know if it gets there. It's at 26.41. It was holding up nicely at 27 at the 618. You can see the sell-off you had at bottomed, obviously, before Bitcoin. I like how the indicators react on Hyperliquid as well. Look at your volume. You can see the wave of volume for buying. You can see the selling come in as well, some selling bars kicking up. And you can see the pattern at play. Wave down, rebound, wave down, rebound, wave down. Let's see what level this can hold if it starts rebounding back up. But $24 right here at this support level, right in the midpoint of here. Very interesting to me if it can hold, if Bitcoin can hold up, I should say, because if Bitcoin level changes, all this is coming down. As you guys know, it's an altcoin. But if Bitcoin can hold up and for some reason you get another $1.50 leakage here to the downside to get some basing action, I like Hyperliquid because I like the rebound pattern it could be doing, and it could have a nice move back up towards $49. So I'm watching that one closely as well. Losing my voice over here, guys. I really appreciate all of you. Thank you for taking almost a half hour out of your day if you made it to the end. And guys, hope to see you on Discord. Be sure to like and subscribe. If there's a hype button, hit that, and talk to you guys on the next one. Follow me on X at Market Canary. Take care, everybody.